Holidays.
Happy holidays.
Same to you.
Miami is playing January 1st. What do we think about that?
Yeah, baby.
All right,
Yes,
glad
sir.
to see you. They showed up good. All right, Mr. Bass, Rick Hale, how are you?
Super good. Doing
Doing
well.
good. Doing good.
Happy holiday week.
All right, well, I'm excited. We've got something new to show you. Luke has gone in and revamped our therealestatestats.com. So when you go to therealestatestats.com now, it's a whole new platform. And when you click on South Florida stats, I wanted to just show you that we have built this super interactive all the housing statistics. So we've added some new things that we didn't have on there before. We have cash sales now graphed. We have days on market on their graph. We've got building permits on their graph, all kinds of stuff. And we're going to show you through that. And then obviously the economic stats, the numbers that drive real estate that Gary Keller models for us at the vision speech and all the stuff that we do at Family Reunion. We have the local version of that all graphed. And then, of course, our county data, which we spent a lot of time on this call going through. And I'm just going to take us there right now. So for Broward County, we're going to start Broward County. Where to go? Here we go. Broward County single family. You can see the graph, and you can, when you hover over the graph, you can kind of compare months. So obviously this week we had 621 active status changes in Broward County single family. If you look at the graph, you can see that that's a little bit down, but we also have it in spreadsheet form, which we're all used to. So 621 on the active status change, a little softening, but it's holiday week, one, two. It's this time of year when the inventory tapers down, getting ready for everybody to launch their spring market listings January, February. But we still have 153 that went under contract and 128 that went pending, which are really healthy numbers going into the end of the year. So I feel really optimistic about that. We had 271 close out in the last 7 days prior to, Hanukkah and Christmas and all the holiday season. Yet 100 canceled. So if you're an expired listing agent, my suspicion is a lot of people took their listings off the market prior to the holidays. So you may historically be geared up for January 1, but there might be an opportunity right now, if you're up for it, to hit those calls. So that's Broward County single family, Broward County condos. You can see in the chart a little softening on the active inventory, but looking at the raw data, 746, 110 went active under contract, and 100 went pending. So same comment, really healthy numbers, ironically, for the time of year, right? 203 closed out in the last 7 days. And same comment, there were 116 that canceled or expired, or 105 that expired. I think there's just a moment up, it's that market of the moment. If that's your game, you need to be on it right now because there's a little boost that happened right before the holidays, right? And then if I jump down to Miami-Dade, we have same storyline, 579, this Miami-Dade single family, a little softening of the active inventory, but 93 went under contract, 163 pending. I'm just encouraged by this. I'll call it a fourth quarter pop, but it probably was more November, December pop, which granted we've been tracking now not even a year, so I don't have annual historic records. But Richard, you're the guy that's been looking at these for years. Is this normal?
No, no.
Okay.
December is well, actually close sales pops up. People want to close before the holidays, before the new year. But the number going under contract, that's somewhat unusual.
Yeah. And then I think the canceled expired is probably pretty normal. A lot of people take their listings off the
Yep.
market before the holidays. Um, well, Miami-Dade condos, I love this chart because it very much shows what we've been trying to say is prior to September 22nd, in most of the condo community, there was a line in the sand where it just changed. And you can see very vividly on this graph a change that happened for condos right around September 22nd. And if we look at the raw numbers, a little softening, 809 in the active inventory, but 83, this is Miami-Dade, right? Yeah, Miami-Dade, 83 went under contract and 115 went pending in the last 7 days. A little soft on the pending, but strong on the active under contract. But there's a lot that closed. That closing number is really large comparatively to what we've seen at 238. And then again, the canceled, right? So if you just kind of look at these numbers, I mean, there was just such a big change in condos in September. Now, if we go down to Palm Beach, single family, we've got an article that was talking about the strength of Palm Beach, I believe. We'll get there. The number 607, same conversation, a little soft, not as drastic, but 154 went active under contract and 111 went pending in single family Palm Beach. Not as drastic of an increase, but certainly 313 closing out in the last 7 days is a big number. And then you're seeing the expired canceled, certainly a little boost there. On the condo market, we've got 523 active status changes, down a little bit. Like I said, this is normal. What's not normal is the strength of the transactions right now, which 68 are pending and 88 active under contract, with 93 expired and 63 canceled in the last 7 days. What do y'all see in the numbers? What do you think? What's the storyline? Rick, you're muted if you're talking.
It looks like consumer confidence is on the rise, and to outrun and outpace the typical seasonality that shows up the final month of the year. It's inspiring. So whether it's rate derivative or just general sentiment around the economy and feeling safe to invest or buy, it's a positive. My hope is that it's the springboard for a strong first quarter.
Yep. Any other comments, thoughts?
Certain micro markets are active, like the lower price points, all ages, communities.
Shows that some
Like
agents
that.
are still working.
Yeah, thanks, Jeff. Yeah, the pain of leadership, everybody takes off a month. All right. I'll show you a couple new data points we haven't had before. So if I go to cash sales, if you go back, cash sales have started to come down. And what do we make of that? I think it was a lot of interest rate driven. When the interest rates were high, people would prefer to pay cash. And yet, now that the cost of money is what I would consider to be below what the return people can get out there, whether in the stock market or in real estate or whatever, they're preferring to keep their cash in hand and invest it versus putting it specifically down on real estate. But are y'all seeing quite a bit of cash transactions still, or are you noticing the decrease?
The cash transactions for us, Brett, were always somewhat split. Your investor properties were predominantly cash deals, and then your multi-million dollar properties again went heavy to the cash side. So without breaking this down by price point instead of as a whole segment, tough to see where that is. I mean, it might tell you that it's our middle market that is showing a little bit more strength now.
Yeah.
Plus, condos being a little dry over the last 6 months, that accounts for a lot of the cash transactions too, especially 55 and over.
Good. Well, anyway, dive into this. You can go on therealestatestats.com, jump on, get lost in some of these statistics. When you're looking at percentage of total cash transactions, whether housing permits, there was a spike in housing permits in June, and then we've been on a strong decline ever since. So builders are certainly being disrupted right now. And they're nervous, right? That doesn't mean they're not developing, but there's certainly a nervous energy in the new construction space. All right. Well, I poked fun last week because every time the Fed drops the Fed rate, the mortgage rates go up. And if you remember 2 weeks ago, the rates were 6.25. And then last week they were like 6.35 after the Fed dropped the rate. But now they've moved back to what we had 2 weeks ago, which I think is a really positive thing. The overarching comment that we're hearing from all the economists is that the rates are going to be stubborn in 2026. They're going to fight to get as close to 6% as possible. Yet you might get a couple locks below 6%, but anywhere from where we're at today at 6.25% and 6% is what most of the economists are predicting the interest rate environment to be. And personally, I think the world is warmed up to the idea that that's becoming a good interest rate, and that's benefiting to us big time. All right, so I want to skip to this article real quick. So there was an article on Inman that said how billionaires think. And obviously this is clickbait, but what they're talking about is the psychology behind high-end negotiations and more so the luxury market, right? Oh, I got to log in. Hang on 2 seconds. So in this article, they were talking about how the high end lead with logic, not emotion. And I thought this was rather fascinating to me because I think in the real estate industry, we typically, maybe not on the investment side, but certainly on the primary residence side, people tend to make a lot of buying decisions based on emotion. Yet they're talking here about the high-end luxury, high net worth clients lead very specifically with logic instead of emotion in their buying decisions. And it's saying they begin with fundamentals like replacement costs, land value, scarcity, long-term upside, and how the asset fits with a broader portfolio. The numbers must tell a clear story before anything else matters. They like to control the tempo of the deal, and privacy is not a preference, it's a requirement. And they expect expertise, efficiency, and alignment. And the takeaway for agents, negotiating at a high level is not about tactics alone. It's about the psychology, patience, and emotional discipline. When you negotiate with clarity instead of pressure, information instead of assumption, and alignment instead of ego, the entire dynamic changes. This is kind of the big summary. What do you think of this conversation? Do you approach your negotiations differently based on price range? Do you approach your negotiations differently based on clientele? What do you think of this conversation?
The simple answer is there is no simple answer. I think
Right.
what he failed to talk about, in my humble opinion, is the dynamic of multiple purchase decision makers, and that they come from possibly completely different places, and that you have to speak a language that both understand. And so one might be emotionally driven if it's a couple or a partnership, and if it's an investment team, I mean, it's just a different conversation. But I do think bringing professionalism and intellectual, content that feeds the intellect is always a priority, regardless of, even if they're highly emotional, you still want to intellectually support a great purchase decision. And if you fail to connect the dots between the head and the heart, you may miss the motivation. I mean, the word motion is in the word emotion. So there has to be, no matter how much money you have, there's still an emotional component that has to play out to drive a decision, but it has to be supported intellectually. But
Yeah.
with multiple people, you better be able to connect with both. If you lose one, and I found it easiest just to ask early on, how do you go about making big decisions? What's the communication look like? What information or data or support can I provide that helps you comfortably make a solid decision? And then let my client tell me, especially in the collective.
Got it. Somebody else.
Making assumptions is dangerous. How about that for a final statement?
I think reading the room and reading the emotion, keeping your mouth quiet and quit letting your mouth run off and just pay attention for the first 10 minutes gives you a lot of answers right away.
Yeah. One of the things, Jeff, I think about a lot is we don't do a lot of training on negotiation skills. And I've asked myself the question for years, like, how do people learn how to negotiate? And I'm wondering if 2026 we bring some conversation to the table around negotiating skills. It doesn't seem to be a very popular training platform per se. I've looked up, there's like a Harvard school on negotiating, which I thought would be fascinating, but um, it's certainly a skill, right? And I think it's one of those skills in real estate you just kind of gain over time on task over time, right? Dave, can you pop on, tell us about that?
So, hi y'all. Mike Zinicola, who's last year he was number 5 in the company. I'm not sure where he's going to end up this year. He's actually retiring this year at the end of the year and selling his team to his business partner. But he teaches an amazing win-win negotiation class, and he bought a place in Naples, is going to be down for the winter, and he's going to come over one Friday in March to train at our market center. So I will let you know as soon as we swear up the date.
Love it. All right. So don't sleep on Google's 7 steps to get more recommendations. So one of the things I think the real estate industry is navigating right now is Google dead and ChatGPT and all the AI alive, or what's the dance between the two? And this perspective was I think very appropriate. He's talking about how Google remains the place consumers verify credibility. So if Dave, you were talking, so I'm going to use you. If I decided I want to interview Dave Gervaisi as a listing agent, I probably still go to Google to research you. And I will research you and I'll confirm my trust before making contact for the first time. Now, I may go to ChatGPT and say, hey, who are the top 5 real estate agents in Broward County that I want to interview to list my house? But once I identify a real estate professional, the consumer's still verifying who they are in the Google space. And so then if you understand that, between shifting consumer behavior, the rise of AI, and the changes of how people search for information, there's 7 steps to get recommended by Google. One, how well do you treat your Google business profile as your top free lead source? So I think most real estate professionals don't even pay attention to their Google business profile. And I'm being nice in saying that. I would say less than 10% of the real estate community has even played with their Google business profile. And I think that's a mistake. One, two, meaning I think every real estate professional should have focus on their Google business profile because all that's linked to mapping, it's linked to reviews, it's linked to all that stuff that gives you that digital footprint. And it's also how AI is going to research you later and find you too. So I think people have utilized the Google business profile. Um, then there's this win the recency game with photos and activity. So Google and AI is going to favor businesses with active and relevant content. So if you've got if you set it and left it 10 years ago, you probably should be updating those profiles on an annual, if not sooner, basis. And you can build momentum with purpose, with reviews, and then publish short local content Google can find. So Google does not only evaluate your Google business profile, it crawls the internet to validate who you are and whether you truly operate as a local authority. So I thought about this article, Rick, and whoever wants to talk. And I thought, man, are we telling people to go back to Google? Because we've been telling everybody to go all in on AI. And I see this being something that never goes away. Meaning, this is the categorized business profile of you in the digital world. And regardless of where AI goes, I don't think the Google business profile is going away. What do y'all think?
I think they're all interrelated and it has to be layered. Your approach has to be layered and thorough and consistent. That's what I read.
Mm-hmm.
So don't assume one is more powerful than the next when they're interrelated and that they rate you based on how those, the different adjuncts, I guess, connect the dots.
Yeah. Frankie, come on, tell us what he said.
So he had mentioned during his training, he gave us tips and tricks on how to be one of the top people that that AI mentions. And one of the things that he concentrated on was on our Google business. Not only does it have to be up to date with the same information across all platforms, so your addresses have to be the same, your name has to be written the same, but you also have to get Google reviews, and you have to get Google reviews on a consistent basis. So he did mention that, for example, it doesn't have to be someone that was our client. It can also be coworkers, people that other realtors, other vendors, that partners that we have, and people who can testify to how we work. So when it comes to Google, Google is still one of the top things that will help us get noticed in AI.
There you go. All right, I'll leave it there. Y'all can read the article. Couple of quick articles. On Inman, it said home sales ticked up in November, which is what we were talking about. November and December are unusually busy right now, and we're believing that momentum is going to carry us into 2026. So we're excited about that. But they're talking about inventories beginning to stall, which is really just the new listings coming on the market, right? Yet I'll take this with a grain of salt because I think inventory always stalls this time of year. It stalls out before the beginning of the new year. I would be a little cautious in saying inventory is stalling, but I would also believe the fact that there is data behind all the stats that says November and December are coming in much stronger than previous years, and certainly abnormally stronger for this time of year, and we're really excited about that. So you can read this article. This another Google article that I thought was fascinating, and somebody's drawing. Just don't draw anything dirty, Emil. All right. So Google MLS listings via House Canary. So House Canary is a tech tool that very much is an interactive AI tool that a lot of lenders used. So I remember having a rental property that was the loan on that property was serviced by I can't even remember the name of the company right now, but the lender would send me emails every week from House Canary. And this is AI, no different than you sending a neighborhood snapshot of some kind to your clients. Yet Google is all of a sudden taking MLS listings and powered with House Canary as technology to use the IDX feed of our listings to almost generate leads. And so this takes us back to a conversation of, is IDX alive or dead? And in the past, IDX was just simply, I put an IDX feed on my website and it would allow me to have the listings from the MLS on my website. And I would hope to generate leads from that. Yet the technology has gotten faster and faster and faster. But the question is IDX a good or a bad thing? And how are you using it to generate leads? And is the Googles of the world, the Chat GPTs of the world, going to start to piggyback off IDX feeds of the real estate community to become really powerful lead magnets? Google's never really been in the IDX game. They've always been in the pay-per-click game. But I think what caused a change here is, if you were paying attention and you were on our updates, Zillow made a play inside of ChatGPT to where if you type Zillow and then a question, it sources everything from Zillow. And I think Google is making a play just the same to use our data to be more of a lead magnet in a digital space. And I don't know if I'm doing this justice here, but the awareness around this is IDX feeds and how the world is changing from a lead generation standpoint. Does that make sense? Any thoughts?
I think get your Google reviews up would be something that I haven't done and I need to get, because it's going to be on Google. It makes a lot of sense. Google should be the leader in lead generating because we Google everything, but they're losing out to ChatGPT right now, so they need to do something.
Yeah. Jason Abrams just did a detailed version of this with the metrics coming from an outside source. It was fascinating. Just like you said, if you get to 50 reviews in Google, your increase of getting picked or searched is 400% after that 50 reviews is put in. So he had all those details. I'm sure it's in command somewhere.
A food for thought. If you're going Google, you don't have to just do a business. You don't have to just them doing a review for your business. It could just be somebody that you know and say, hey, I met you today. Can you give me a review? It builds more on your Google reviews if it's not just business. It's everything going on your Google reviews.
Yep. All right. We need to get a Google business expert in and teach us all the tips and tricks of that. All right. Couple quick other articles. South Florida home sales climb in November. Prices weaken. I think pricing is going to be a big conversation going forward. What's happening with pricing? They're talking about how South Florida single family sales surged 13% in November. That's a big number. Palm Beach County led with 19% sales growth in November. But the condo prices certainly suffered a little bit in the Tri-County area. So they had some price depreciation around condos. This is coming out of the South Florida Business Journal. Just an awareness. I think the sales are good, but pricing's having to have a little bit of a touch with reality to get these things moving, right? And we talk about that in real estate all the time. Like outside of condition and location, price is the biggest factor to move the inventory. And it certainly is starting to show a little bit. And then the last one, we've talked about this lock-in effect. And I don't know if I agree with this. It's saying mortgage rates are falling, but owners still won't sell. They still 54% of mortgage holders still have a mortgage rate below 4%. So basically, they're saying 54% potentially could be locked in with the locked in effect. Yet, I don't know. I think I'm going to go back to I think most people are warming up to the idea that 6%, 6.25 is a pretty good normal interest rate. And I'm not hearing on the ground that there's a lot of locked in conversations. Are y'all hearing that? Are your people still telling you they don't want to sell their 4% interest rate mortgage and go buy at 6.25? Are y'all hearing that still?
To some degree, they are. But that just tells me that what the alternative option isn't as exciting as it needs to be or will evolve into at some point, either with price or availability and inventory and supply improvement.
Got it.
I think that was
2%
more
is
of a
gonna stop
media
somebody.
play than anything else with that news. Um, yeah, when you're dealing with, you call them discretionary home sellers, that's who that's applying to. People move every day because they have enough of a reason to move, and the interest rates aren't going to affect them any. And you also realize people that have been in their home for a number of years, the equity they've built in it. If they're moving and they want to buy an interest rate back down to 4%, take that equity in your house and buy down your interest rate to 4%, and it won't have an effect on you.
Yeah. There you go.
Well, and as a real estate consultant, it sounds like the most important thing you can do is help them frame those options in a way that they can absorb and accept it. Because I mean, there's a lot of equity that's available and it's stuck in your house. And until you move, you don't have access to those choices in that discussion.
All right,
Well, and
guys,
I
my
think
goal is to start and end on time, and we're a little over. So one last comment, Lance. You wrap it up big.
I was just going to say when we were talking about the discretionary sellers, I think that the people that have quite a bit of equity, maybe we need to remind them without trying to be a financial advisor that there's only, if you're a single person, you get $250,000 of waiver of your capital gain. If you're a married couple, you get $500,000. So those people that have $600,000, $700,000 worth of equity that don't want to move because there's not much to upgrade to, that overrides the interest rate fluctuation, that's a window of opportunity right there. You've got taxable income that we can use as expenses on your future closing costs, and that will come off of your taxable liability.
There you go. Negotiation 101.
Brilliant.
Have a good one, guys.
Happy holidays.